Boom, we're live. The inflation crisis is worsening. Florida is flooding. Sarasota is underwater. We've got Tampa flooded. I think Sarasota got hit with the worst rain that is predicted to happen I love these estimates, anywhere from 500 to 1,000 years. So it is factually true that during the summer, it is very predictable that it will rain in the afternoon, but we have had an unusually dry summer. We have not had the same weather patterns that we normally do. And the oceans have been extremely hot as of late. Now, I'm not a global environmental specialist, but I do know that El Nino and all type of other weather patterns absolutely 1000% impact the Florida market, the state of Florida. And we are just getting bombarded. And frankly, there is not the wherewithal to help all these people. So there are people, shout out to Sarasota Tim. I suspect he's probably underwater right now. But hello, my name is Russia. Hear me roar. I am too big to ignore. And I'm right off the coast of Florida right now. That's interesting. As the United States is in volatility season and we're in election season, and there's all kinds of things happening in the news that are being leaked here and there, and felonies for this guy, felonies for that guy, all types of political instability. I wonder what Russia and China are thinking. Wonder if they're probably saying to themselves, now would be the best time to make a strategic play when our biggest enemy is at its weakest and can barely communicate with each other. Let's just go take over Cuba. Let's go launch some nuclear submarines and a warship. Let's just plant them right off the coast of Florida. That's in our best interest. I wonder why they're doing that. I have no idea. Could it be it's the end of the world? It's possible, but I don't want to be a doomsday conspiracy theorist, and I don't want to alarm anybody. The reality of it is, I was so focused today in terms of actually working in my real estate business, helping people find their dream homes, dream lifestyles. I wasn't focusing on any of this stuff whatsoever. I was too busy taking care of business. But shout out to Kevin 24/7 because he caught my attention and let me know some of these things that were going on. I was oblivious. I like to think of myself as a content creator. I do not like to think of myself as a content consumer because it's an enormous waste of time. And I don't want to waste time ever. It's the most precious resource that we have. But all that being said, I was ready to go. I thought today we were going to be talking about the CPI numbers. I thought we would talk about the Fed. I thought we would talk about Biden's reaction to it. And we will cover these things because the misinformation, the economic window dressing that's happening right in front of our faces is so alarming to me that I felt that I had to do an emergency live stream just to combat the narrative, because these numbers are just total and utter horseshit. If anybody thinks that we are in a position of strength economically, then I don't know what to tell you, but it's definitely not true. Now, that being said, I do want to get into some of the actual things that are happening. So I'm going to share my screen here for a second and see how that goes. All right. So it's the end. It's the end of the world as we know it. And I feel fine. I'll feel much finer if my clients get their contracts accepted. But we're showing some homes today. Despite what you may have heard, if your home is priced the right way and it's updated and it's in the right location, you will have multiple offers that bid the price higher. And unfortunately, that's what we're competing against right now. But we put our best foot forward, and I suspect I will get them, both clients, the homes that they want. We've got one under contract yesterday, and we already knocked 30 grand off the list price. But what does that have to do with the Navy deploying 3 destroyers and planes to monitor the Russian submarine and frigate off the Florida coast? It doesn't have anything to do with that. but I could care less about my next real estate closing or the value of my home if I think that we are in peril of Russian submarines and frigates chilling out 30 miles off the coast of Florida. No freaking bueno. But here it is, plain as day. The Pentagon deployed 3 Navy destroyers and maritime patrol aircraft this week to keep tabs. To keep tabs. It's interesting. Keep tabs on a group of Russian ships that conducted missile exercises and reportedly got within 30 miles of the Florida coast. Well, if this does not tell you that ain't nobody afraid of big, bad Biden, who's probably eating ice cream and telling people don't, and this is not meant to be political, but if you can barely keep yourself from shitting your pants on a regular basis, chances are the rest of the world is not going to respect you very much. And if you don't have authority, well, then the inmates run the asylum. And right now, the world's inmates seem to be running the asylum. But it is what it is. And right now, we've got Russia flexing. We've got the United States keeping tabs. I don't know what that means. And we've got Florida underwater. Now, you've probably heard me talk about some of the insurance challenges that exist within the state of Florida in the past. I have no idea how much economic damage this is going to cause to Sarasota, to Tampa, to Miami, to Fort Lauderdale. But I do know that there's going to be major damage. We will need some sort of cash infusion to fix these issues. And a lot of people think that Florida will be underwater at some point. I just didn't know that some point was going to be today. But that's that is what it is, right? So let's jump from there to the better news, which of course is what I just alluded to, which is that South Florida residents are told to steer clear of life-threatening flooding. Well, I suspect we can also steer clear of life-threatening nuclear attacks by moving to Antarctica. But I don't even know if that's going to be safe either. But torrential rains pounded South Florida on Wednesday, creating life-threatening flooding conditions for some. Sarasota is a disaster. Fort Myers is a disaster. Fort Lauderdale Airport, disaster. 11.28 inches at Fort Lauderdale Airport. That's unbelievable. This is in the last 48 hours. 7.5 in Miami, 8 in Fort Myers, and 7, almost 8 in Sarasota. Just pounding everyone with excess water. And you can see the guy in the street. No bueno. But the rain Wednesday followed a waterlogged Tuesday night in which Florida's west coast was hit by a record-breaking 8 inches of rain in just 3 hours. No good. And there have been lots of insurance experts who have predicted for a long time that many of the municipalities don't have the infrastructure or insurance to cover these climate change risks that are obviously more real than I gave them credit for. But when I'm looking for potential systemic risks that could break something within the system, which then would absolutely lead to the economic collapse that has been kicked down the kicked down the road for the last 15, 20 years. Well, that could be one of the wild cards that undoes the economy. It's not the one I would have predicted. In fact, when I read those articles in the past, they were talking about, or not articles, analysis from different insurance experts. They weren't even talking about Florida. They were talking about the middle of the country. They were talking about the heartland being at risk for flooding and economic collapse and not having the means to be able to cope with that. So this is absolutely not something that's on my radar screen. But that being said, nobody knows what it's going to be that breaks the system. Nobody knows what's going to create the next collapse. All I know is that there are so many different risks inherent in the system that we would have to be oblivious not to recognize some of them. And you may say, well, Chris, it sounds like you're talking out both sides of your mouth because you just did a live stream talking about the astronomical month over month appreciation in home values in many of the cities that you service. And both statements are true. Boca Raton, Delray Beach, Boynton Beach, depending on which market you're talking about in these large markets. So if you go micro into these markets, you're going to find pockets of neighborhoods where home values are increasing 20, 30, 40%. You'll also find micro markets that are in those same areas that are doing the absolute opposite. It's supply and demand 101. But if the consumer can't walk to their house and they have to swim there, well, then chances are they're probably not going to be interested in buying the home. Maybe they will instead buy a boat, and maybe one day I'll become a boat broker. Never really thought about it, but I'm prepared to pivot and do whatever I must to keep it moving. But yeah, this weather thing is kind of unbelievable, and the fact that we've got the rest of the world disrespecting us in a way that they're willing to bring Russian subs and threaten our homeland, to me, tells me everything I need to know about what they think about us as a country. They don't think very highly, and that is no bueno. From there, let's take a jump over to, oh man, this is where I had intended to start prior to learning about some of these other things going on. But Biden cheers cooling inflation ahead of key Fed interest rate decision. Now, this is 5 hours old, but he was very pleased with himself. And I don't know if it was because of the cooling inflation or the fact that he didn't crap his pants. But doesn't matter. He took the opportunity to attack the economic proposals of his likely November election felon opponent, Donald Trump. Well, if that's not predictable, I don't know what is. But the consumer prices remained unchanged in May, marking the first time since July 2022 that prices have not risen month over month. That sounds like a win, right? Maybe if you don't know how to read, but I don't think so, because wages are rising faster. Hold on, let me make sure I get this right. Prices are still too high, but today's report shows welcome progress on lowering inflation. Wages are rising faster than prices, and unemployment has remained at or below 4% for the longest stretch in 50 years. I know many families are feeling squeezed by the cost of living, which is still too high. Well, you got that one right. Which takes me to a different page. So let's recap what Big Papa Powell had to say, because Big Papa Powell ain't cutting interest rates yet. And again, this is time marked, so I'm not going to read all of it. I know this is an emergency broadcast, so I want to be brief. I want to keep it to the point. But what we must look at is the fact that inflation data this year has not given the Federal Reserve greater confidence that it's moving closer to the 2% goal. We will need to see more good data to bolster our confidence that inflation is substantially moving towards 2%. I don't know who came up with 2% as being the goal. I heard it was some economist out of Australia. I don't know if he pulled this number out of his ass. I have no idea. But what I do know is that the cost of living is not decreasing. And yes, they'll point at the fact that gas at the pump is a little bit lower than it was in the past, but they don't go out there and say it's because they depleted the strategic petroleum reserve that we might need if Russia is bringing warships 30 miles off the coast of Florida. You can't really do much if you can't fuel your own warships, your own army, your own defense, your own military. You better have some freaking gas in the tank. And right now, economically, we don't have much gas in the tank. Right now, politically, we don't have much gas in the tank. Right now, we don't really have much of anything other than constant dissension across the board. And that's got to change. It's no bueno. But let's keep going here. Let me scroll to the final recap because this went on all day. And I think here's where consumer rates stand ahead of the Fed's decision. Now, mortgage interest rates, just so we're all on the same page here, have been skyrocketing. It's priced many folks out of the market. And we're in June, I've probably, I don't want to say lost, but I've worked with I don't know, half a dozen, and maybe not half a dozen, a baker's dozen of clients who were looking for their dream home. They were looking for their dream lifestyle. They elected to wait because they were waiting for the market to crash. They were waiting for mortgage interest rates to come down, and none of them can afford to buy a home anymore. And that's unfortunate because all of them desperately want to be out of where they live and they want to be in Florida, just not the part that's underwater. But the Federal Reserve's rate hiking campaign has had a notable effect on consumers' wallets, boosting the yields. I love how they spin this. You got to love CNBC. Boosting the yields they earn on savings while also increasing financing costs. Well, yeah, if you've got money and you can invest that and park that into something that pays a high yield, well, chances are you probably have money. But so good for you, the rich get richer, and that creates an even bigger disparity of a wealth gap. But the middle class is getting crushed, basically doesn't exist anymore. The lower class, not that there's a such thing as lower class, but folks with low income are just they're being flooded. They're probably drowning in the streets, but the rich are getting richer. And we continue to see asset prices skyrocket. I don't know how the market traded today, but when I last checked, it had hit a new high. I think it was a new all-time high. It's based on the strength of tech. And if you delete that from the index, well, then what you have is a nothing burger. But home prices continue to skyrocket. People are feeling pain like they never have before. I speak to so many real estate investors who back in 21, 22 thought it would be easy to get into the real estate investment game. And they were inexperienced, or maybe they thought they were experienced, or who knows what they thought. They weren't working with me at the time, but they didn't know their numbers. They didn't price in what would happen if their costs exploded. So if they had a budget for certain thresholds financially, and they got that wrong, their estimate was off, well, then they're in a position where they are getting squeezed out of those properties because they can't afford the taxes. They can't afford the property insurance. They can't afford the assessments. They can't afford to fix and repair and upgrade and maintain the property. And to add insult to injury, in some instances, we're seeing rents compress. We're seeing rentals decrease in value. There is a lot more inventory that's starting to hit the market. There's new construction. There's all types of apartments that are being built everywhere. And so now there's a lot more competition. And again, this depends on where you're at, but I get phone calls on a regular basis from folks who thought they were going to build a real estate portfolio, found that it was a terrible decision, and now they're coming to me and saying, Chris, can we tap out and get the equity while we still have it? And I hope so, because I know that equity is not real until it's realized. And I hope they can, but I'm starting to see more and more inventory come back onto the market. And again, this is going to be regionally specific. It's not necessarily everywhere. The higher price points, the luxury homes are in high demand. There is short supply. But anything that is in that mid-tier price point, there's going to be a lot of competition. There's going to be, I would be shocked if there's not a rush to the exit doors. And I would be shocked if we don't see some price corrections here happening soon. But it is what it is. I'll keep you posted, and I'm committed to telling you the truth so that you can make the best decisions for yourself, for your family and for your financial bottom line. But where are we going here? Federal Reserve's rate hiking campaign had a notable effect. I already read that. CNBC's team compared where rates stood prior to the Fed's March 2022 meeting when it began raising its latest versus last week. Consumers are shelling out more to cover the interest costs on mortgages. Well, I think I just said that. What I don't think I fully articulated or dialed in, if these folks were in an adjustable rate mortgage, thinking that they may have an opportunity to refinance even lower, well, sorry, bub, you got it wrong. And the market doesn't care what you think. The market is always right. And if the mortgage market and the mortgage interest rates have skyrocketed and you are about to be reset into a significantly higher rate, well, then you, my friend, are fucked. And I don't want anybody to be fucked, but the reality of it is a lot of people are in denial as to where they're actually at. And most people don't see the light until they're on the steps of the courthouse. Right. Yeah. Until they're on the steps of the courthouse, period. When there's a financial gun to your head, people see the light pretty quickly. But at that point, it's probably way too late to get involved. So if you think you are in financial peril, if you think you are in financial risk, if you don't know what your numbers are, then please figure them out. Do your own due diligence. But make hay while the sun's shining, because there's a metric shit ton of homes in Florida and throughout the country that are very equity rich, to the tune of trillions of dollars of equity over the course of the last quarter. I forget what the CoreLogic statement was, but it's significant. That can vaporize so fast it'll make your head spin. That can vaporize just as fast as one of those Russian subs can launch a missile into Miami and wipe out the entire city. But I'm hoping that doesn't happen. All right, consumers are shelling out more to cover their interest costs, with the rate on a 30-year fixed reaching 7.15. If you've got perfect credit. If you don't, you're paying 8, 9, 10%, compared to the rate of 4.29% just prior to the Fed's initial move to hike rates. Excuse me, to hike rates. I got cotton mouth here. Here's a shocker. Rates on credit cards have also jumped more than 400 basis points, sitting at 20.68%. Huh. I wonder if there's anybody out there that's living off their credit cards. I wonder if there's anybody out there that's only making minimum payments. I wonder if there's anybody out there that's using that as a lifeline up until they can't. And when they can't, I wonder if there's going to be an uptick in bankruptcies. I wonder if there's going to be an uptick in foreclosures. I wonder if there's going to be an uptick in financial distress that creates a break in the system. Wonder if that's possible. I don't know, but history would tell me the answer is yes. When it comes to savings, and if you're prudent and disciplined and save your money, well, then congratulations, you're doing a great job. But if you're not, well, that's not good. I hope you're saving for a rainy day, and the rainy day is here, especially if you're in Sarasota or Tampa, where you're flooded. But consumers' fortunes have improved. The annual percentage yields on a 6-month certificate of deposit is now 3.4%. Whoop-de-freaking-do. Yes, if you've got money, investable assets that you can move around and trade and benefit from those higher yielding securities or instruments, that is fantastic. But if you can't, no bueno. All right. Traders will focus on the Federal Reserve's dot plot of interest rates expectations as the central bank concludes its policy meeting. Earlier, the Fed had indicated 3 cuts for 2024, 3 rate cuts for 2024. But given a recent blast of strong job reports, now, strong job reports, the way they report jobs is complete and utter horseshit. There has been a massive contraction in the labor market. The white collar workers that have been laid off are now working 3, 4, 5, 6, 10 jobs to try to replace the income that they lost when they were eliminated, whether it's by AI or downsizing or whatever. But the strong jobs report is total and utter horseshit, period. And could be wrong, time will tell. But I do know that they revise these numbers on a regular basis. And many are expecting the forecast to show two reductions. The central bank's updates and its latest rate decision are coming out just after hours after May's consumer price reading. On a monthly basis, the headline CPI reading held steady from April, but it rose 3.3% from a year earlier. Okay, so to be clear, inflation is not going down. Inflation staying the same month over month, or whatever time period you're looking at over a sample size. Look at it in totality. Look at how much the cost of goods and services have increased over the last 4 years. And if you think that this is good news, and you think that you can believe what they're telling you, and that this is great, this is a great interest rate expectation win, well, then I don't know how to help you, because everything is insanely overpriced these days. And the cost of living isn't going down, it's going higher. And people are suffering. Okay, now I've talked in previous live streams and in previous content about what's actually happening in my markets, in the housing markets that I serve. And by and large, it has been home value appreciation pretty much across the board. But there will be anomalies. As I mentioned, working with a client yesterday, knocked something close to 30K off the list price. We haven't even gone into the inspection period where I'm going to knock more off. They will get a deal based off a list price, but the list price was way too high to start with to begin with. Had that seller priced it the right way, they would have had the leverage. They would have been able to get multiple offers that bid the price higher, and they would have likely gotten significantly more, but they didn't. And now they're going to get, I don't want to say exploited. They're going to get a very harsh negotiation from me, which will benefit my buyer and it won't benefit them. But that's what happens if you use a flat fee listing service in the MLS. You get no representation. All right, I'm on a rant. Why should I stop now? I've already covered the CPI number. So let's move over to JP Morgan's equity strategist that said stocks are ignoring the abundant risks. Sees maybe one Fed cut. Well, thank you, JP Morgan equity strategist. But you're not telling me anything I didn't already know. Here is what I think could very likely be one of the linchpins for something within the system breaking. And the banking system almost broke last time. And when we were at risk of that, that's when we started to see these policies get enacted, the bailouts happen, the easing of money, all types of stimulus, all types of games being played. And I was a stockbroker when that happened. I remember telling my clients in real time, it's the worst possible thing that we could do, because if we do not pay that price now, if we don't feel that pain now, it's going to be so much worse in the future. Well, the future is here. Large banks face higher risk from commercial property loans, sparking increased concern. Risk of failure found to rise at more than 65 major lenders. If you have been watching for a while, you know that over a year ago, I did a video that talked about the liquidity crisis that will destroy the housing market. And I want to talk about that liquidity crisis, because the reality is that if the general public does not trust that their money is safe in the bank, there will be bank runs. They will withdraw all of their money. The banks don't carry money in their banks. Banks lend money. So if everybody who has a bank account goes to withdraw their money, well, you will have a bunch of banks that get mobbed and overrun by angry customers. There will be zero trust in the system. There will be massive panic. And if there is massive panic and the consumer does not trust that their money is safe, you can bet your sweet bippy that there is going to be a major economic and market collapse, because the system doesn't work without liquidity. And that's what we're going to be looking at. And it's happened before. It will happen again. And frankly, the sooner the better. But more than 65 of the largest U.S. banks are at a higher risk of failure because of their commercial property loan exposure. Well, in the past, the bad loans that were going to break the system had a lot to do with real estate. It had a lot to do with fraudulent loans. It had a lot to do with securitizing debt in ways that made no sense and didn't add up on someone's balance sheet. We have the same thing happening again, except now it's in the commercial space. All right. And it's not good. I don't want to bore anybody here. Let's get to the brass tacks. And excess of 600%. If you go to get a loan and your debt to income ratio is too high, they don't give you the loan. But none of that applies to any of these people here, none of these institutions. You can have exposure north of 600%. And and nobody seems to care because the system wants to protect the system. They don't care about us, they care about themselves. And it's not going to be pretty when the shit hits the fan. But when the musical chairs game stops, if you don't have a seat in the economic game of Monopoly that we're playing, well, then you are sitting on your ass. And 3 banks have failed in the past 2 years. And now we have several candidates where their exposure to commercial real estate is over 500%. Should another bank fail, it's likely that depositors will pull their money out of these highly exposed banks, which could lead to banking panic, similar to what we saw during spring of 2023. Well, I guess they don't remember history very well because the banking panic that you thought, well, I don't want to discount the panic that it was. I'm sure if you were affected by that in 2023, you were certainly panicked. In fact, I had a client who was closing on a property that day, a client of SVB, and he was panicked. He didn't know if his wire hit. He didn't know if his funds were there. He didn't know if his home was going to close. Thankfully, it did, but he was panicked. And when people are panicked, when a country is panicked, when anybody's panicked, they don't make good decisions. But if you thought that panic was bad, then you don't remember what it was like when Bear Stearns failed and when the banking system failed. That was real panic. And history is a good indicator or a good barometer of what you're likely going to see in the future. But bank runs are not new. Bank failures are not new, and panic is not new. But you must be prudent, you must be disciplined, you must be well capitalized to be able to weather this volatility season. And it's going to be nasty. And who knows what's going to happen with these Russian subs or these Russian warships or the rain, which is probably going to completely flood the streets, probably destroy my house, and I'll probably drown while I'm sleeping tonight. But I hope not, because I want to live. I want to live. I want to make hay while the sun's shining. Blackstone lands apartment refinancing, more delinquencies and defaults expected. A busy 2 weeks. I'm not going to beat the dead horse on this, but if you don't know, there are many threats that are baked into the cake. There are many things within the system that must break. And I don't know when it'll happen. I just know that it has to happen. And it could be tomorrow. It could be 10 years from now. It could be after I'm dead. I don't know. It could be 100 years from now. I don't know what games that the powers that be will play in order to continue to play this game of economic Russian roulette. And Russian roulette's probably apropos given what's going on, but they will do whatever they can to continue to artificially stimulate whatever they can, certainly through election season, but I suspect for much longer. And I don't know how to solve that. I don't know what the solution is. I do know that it's not going to be good and it will be painful. And yet, I think as a country, we are strong, we are resilient, we will, I pray to God, let go of some of the nonsense that we have bought into and come together as Americans, because united we stand and divided we fall. But it's the United States of America until further notice, and that's it. So I hope you found this content valuable. If I can help in any way, please reach out anytime. We would love to help. If you're thinking about buying or selling anywhere in the state of Florida or within the country, there are links that you can click down below. We will connect with you right away, because ain't nobody overpaying on my watch, and ain't nobody not finding the one buyer on planet Earth willing to pay more than anybody else for your home if you're thinking about selling. Let's just hope that China and Russia don't go nuclear on us in between, because if that happens, well, then it's game over. And for now, so is this video. Thanks for watching. See you on my next one. Have a great night.